Welcome to this episode of Influential Pod, where we explore key investment strategies. In this episode, The Gold and Silver Lining, we're diving into the world of precious metals. Join Morgan and Isabel as they break down gold's historic role as a safe haven and silver's exciting growth potential. From physical bullion to ETFs, we'll cover how precious metals can fit into your portfolio and trends to watch for in 2024. This is the podcast for staying informed on investments. Be sure to check out our influential magazine for even more insights.
Hey everyone, ready for a deep dive into precious metals?
We're talking gold, silver, and even a look at Warren Buffett's surprising silver investment back in the day.
We've got a ton of research to dig through.
It's fascinating stuff.
It is. It seems like gold and silver are often lumped together.
Right.
But our research shows they actually appeal to very different investors.
Yeah, it all comes down to risk. Gold is kind of the reliable one.
The steady Eddie.
Exactly. It's the classic safe haven. When economic storms hit, gold tends to hold its value, even when other assets are tanking.
Look back in 2008 during the financial crisis, right?
Exactly.
Our sources said gold just soared back then.
Yeah, it went from around $800 an ounce to over $1,900 just a few years later.
Whoa.
That's a safe haven. Now, silver, on the other hand, silver's a bit more, how should I put it? Spicy.
Yeah, spicy. Its price can really swing around.
Volatile.
Volatile, exactly. And that's because silver isn't just a precious metal. It's a key ingredient in a lot of industrial applications.
Oh, right. Things like electronics and solar panels, they use a lot of silver.
All those technologies we rely on, they drive up the demand for silver. So while silver might offer quicker gains, you got to be prepared for a bumpier ride.
Higher risk, higher reward, as they say.
Exactly. And, those differences actually highlight why both gold and silver are so valuable in a well-rounded portfolio.
Especially now, it seems like everyone's worried about the economy.
Absolutely.
So break it down for me. Why are precious metals so important right now?
It comes down to three things: diversification, inflation hedge, and that safe haven status we were just talking about.
Okay, let's start with diversification. What does that even mean?
Imagine your portfolio's like a ship, right?
Okay.
Stocks and bonds, those are your main sales. They're great when times are good.
Right.
But they can be vulnerable if things get rough. Precious metals are like adding ballast to your ship. They add weight and stability to your portfolio so you can weather those financial storms.
So even if one part of your portfolio takes a hit, the precious metals can help soften the blow.
Exactly. Now let's talk about inflation. It's like a silent thief,
Oh, tell me about it.
eating away at the value of your money.
My grocery bill is out of control.
Right. You work hard for your money, but with inflation, it buys less and less over time. That's where gold, especially, can really shine. It's proven to hold its value and often even increase in value when inflation is high.
Why is that?
Because unlike the money we use every day, which governments can print more of whenever they want,
Right.
gold is a finite resource. There's only so much of it on Earth.
Makes sense.
And that scarcity helps it keep its value over time.
It's like a backup currency almost. I read that gold prices went through the roof in the 1970s when inflation was a huge problem.
Oh yeah, it was a wild time for gold. But let's not forget about silver either. Remember, it's an industrial metal. As inflation pushes manufacturing costs up, the value of the silver used in those processes can go up too.
Double whammy. Okay, so we've covered diversification, we've talked about inflation. What about this safe haven idea? It sounds almost mythical.
It's all about history. Gold has this incredible track record of holding strong during times of crisis.
Wars, natural disasters, that sort of thing.
Exactly. Even pandemics. When investors get nervous, they turn to gold. It's seen as a safe bet when everything else is chaotic. And as demand for gold goes up, well, I guess the price.
It goes up.
Exactly.
Wow. It's amazing how these metals have been captivating investors for, centuries.
That's true.
But let's get practical. We understand why precious metals are valuable, but how do you actually invest in them? Our research pointed to two main options: physical bullion and ETFs.
And each has its pros and cons. Physical bullion means you own the actual physical asset. Gold bars, silver coins, that sort of thing.
There's something very satisfying about holding a gold bar in your hand.
It's tangible, you own it.
Exactly. But our research also mentioned that there are some logistical challenges that come with physical gold.
Yeah, security and storage are definitely things to consider.
It's not like you can just stuff a bunch of gold bars under your mattress.
Right. We're talking about serious weight, especially with those gold bars. You might need a home safe, or even look into a safety deposit box at a bank.
Yeah. Definitely something to think about. Now, on the other side, we've got ETFs. They seem like a more user-friendly option, especially for those of us who aren't ready to build Fort Knox in our basement.
Exactly. ETFs, or exchange-traded funds, are basically like baskets of assets that trade on stock exchanges.
Okay.
But instead of holding a bunch of different stocks, they're tied directly to the price of gold or silver.
So you're buying shares of an ETF that tracks the value of the metal.
Yep. It's a way to benefit from the price movements of gold and silver without actually having to store the metals themselves.
Much less hassle. And our research mentioned that ETFs are really flexible. You can buy and sell them easily, just like regular stocks.
Absolutely. They're much more liquid than physical bullion.
Yeah.
If you need to adjust your portfolio quickly, ETFs give you that agility.
Got it. Speaking of smart investors, our research dug up a really interesting story about Warren Buffett. Apparently, he made this big move into silver back in the late 90s.
Oh, yeah, that was a classic Buffett move.
And it caught a lot of people off guard. This is the Oracle of Omaha we're talking about.
Right, the guy's a legend.
Exactly. And he's known for being very disciplined, very value-oriented. He's not usually one to jump into commodities.
True.
So everyone was wondering, what did Buffett see in silver that everyone else was missing?
Well, silver was really out of favor at the time.
Right.
Yeah, its price had been stuck in a rut for years.
Mm-hmm.
But Buffett, he saw an opportunity in that. He realized that the market was undervaluing silver.
Undervaluing it how?
Well, there was this fundamental imbalance between supply and demand.
Okay.
In the late 90s, silver was actually facing a bit of a supply shortage.
Interesting. I wouldn't have guessed that.
Mines weren't producing as much.
Right.
But at the same time, demand from industries was growing. Electronics, solar energy, they were all using more and more silver.
So the world was using up more silver than it was digging out of the ground.
Exactly. But here's the thing. Even with demand going up, silver prices stayed low. Buffett saw that disconnect, and he realized that it couldn't last forever.
So he was betting that eventually the market would catch up.
Exactly. He understood the long-term trends. He knew those above-ground silver inventories were shrinking, and that new production couldn't keep up with demand forever. It was only a matter of time before the market realized its mistake.
And when it did, the price of silver would go up. So did his plan work?
It did. Buffett sold his position in the early 2000s, just as silver prices were starting to climb. He made a tidy profit from that little move.
Proof that it pays to be patient and trust your gut, even when everyone else thinks you're crazy. But let's shift gears for a moment and talk about the global landscape for precious metals. Our research highlighted some really interesting dynamics, especially in big markets like China and India.
Yeah, it's fascinating how cultural and economic factors play into demand in those regions. China, for instance.
They're like the 800-pound gorilla in the room when it comes to gold.
It's true. China's become the biggest consumer of gold globally, and it's not even close.
One study we looked at said they account for almost a third of global demand. That's huge.
It's massive. And it's not just individuals buying gold either. The Chinese government has been stockpiling gold reserves like crazy.
Wow. So China's got this huge appetite for gold, and it doesn't seem to be slowing down anytime soon.
Nope. It's a major force driving the global gold market. Now, India, it's a different story. Gold is deeply ingrained in their culture.
Right. It's not just an investment there.
It's way more than that. It's part of their traditions. It's passed down through generations. Gold is essential for weddings, festivals, all sorts of important life events.
It's almost like a currency in its own right.
In a way, yeah. And that cultural significance has made India one of the world's top gold consumers, right up with China.
Fascinating. Two very different cultures, but both with this deep-rooted connection to gold. So what does this all mean for the average investor? How do we take all this information, all these global trends, and actually apply it to our own portfolios?
Well, the good news is you don't need to be a global economics expert to build a portfolio that includes precious metals. Our research had some really practical tips.
Yeah, let's talk strategy.
First and foremost, start small. Most experts recommend allocating somewhere between, say, 5% to 15% of your portfolio to precious metals.
Okay, so don't go all in on gold right out of the gate.
Exactly. It's about balance.
Yeah.
How much you ultimately invest depends on a couple of things: your risk tolerance and your investment timeline.
Okay, let's break those down. Risk tolerance, what does that really mean?
It's basically how comfortable you are with the ups and downs of the market. Are you okay with riding out some volatility for the potential of bigger gains?
Okay.
Or do you prefer a more steady, predictable investment strategy?
Because like we talked about earlier, gold and silver can behave pretty differently.
Exactly. Gold is generally considered the safer bet, while silver can be a bit more, shall we say, exciting.
A little more pep in its step.
Exactly. And then there's your investment timeline. Are you investing for the long term, like for retirement, or are you hoping for some quicker returns?
Because I'm guessing precious metals are more of a slow and steady wins the race kind of thing.
You got it. Gold, especially, is often seen as a long-term play. It's about hedging against inflation and preserving your wealth over time.
So if you're trying to get rich quick, precious metals probably aren't the answer.
Probably not, no. Patience is key with these metals. You know, another thing our research mentioned was dollar cost averaging. It seems like a smart approach for precious metals.
Dollar cost averaging. That's a mouthful. How does that work?
It's actually pretty simple. Basically, you invest a set amount of money at regular intervals, no matter what the price is.
So let's say I want to invest in gold. I could decide, okay, I'm going to put $100 into a gold ETF every month.
Exactly. And some months, gold will be up,
Right.
so you'll get fewer shares for your $100. And other months, it'll be down, and you'll get more shares.
Interesting. So it kind of averages out over time.
Precisely. It's a great way to take the emotion out of investing. You're not trying to time the market.
Right.
You're just consistently investing and letting the market do its thing.
Makes sense. You know, all this talk about gold stability and its history as a safe haven has me thinking about the rise of cryptocurrencies.
Ah, yes, Bitcoin, Ethereum, the new kids on the block.
Exactly. They're often touted as the new digital gold, the future of finance. So how do these digital currencies stack up against something like gold, which has been a store of value for centuries?
It's a fascinating debate.
Yeah.
And honestly, there's no easy answer.
It's like a clash of the titans, right?
It really is.
Yeah.
On the one hand, you have gold, tangible, historically significant, and battle-tested through all sorts of economic storms.
And then on the other, you've got these digital currencies. Cutting edge, decentralized, and potentially revolutionary.
And each has its own set of risks and rewards. Cryptocurrencies, for example, are still relatively new.
They haven't really been through the ringer like gold has.
Exactly. They've shown they can be incredibly volatile. Remember what happened with Bitcoin? Soared in value, then plummeted back down. That kind of instability makes some investors nervous, especially if they're looking for a safe haven.
Yeah, that's a valid concern. Gold has this long, proven track record of holding its value, even during tough times. But then again, cryptocurrencies offer some unique advantages too.
For sure. They're fast, they're borderless. You can send them anywhere in the world almost instantly. And there's a certain level of anonymity with crypto that you don't get with gold.
It's almost like a generational thing too, right?
Totally. Younger investors who are comfortable with technology and maybe a bit more skeptical of traditional financial systems, they seem much more open to the idea of digital currencies as a store of value.
It's a fascinating dynamic to watch unfold, but here's a thought. It seems like gold itself is going digital too.
Oh, absolutely. We're seeing more and more platforms that let you buy, sell, and even store gold digitally. And some of them are even using blockchain technology, the same tech behind cryptocurrencies.
Wow. So it's like the best of both worlds. So where does this all leave us? What's the verdict? Will gold hold strong against these digital disruptors, or are we witnessing a changing of the guard in the world of finance?
Honestly, it's too early to say for sure. Both gold and digital currencies have the potential to be valuable parts of a well-diversified portfolio.
It doesn't have to be an either-or situation.
Exactly. I think the key takeaway here is to stay informed, do your research, and figure out what makes the most sense for your own financial goals and risk tolerance.
Wise words. Well, that's about all the time we have for today's deep dive into the world of precious metals. It's been a fascinating journey exploring gold, silver, and even Warren Buffett's intriguing silver play. From understanding the historical significance of these metals to navigating the exciting new frontier of digital currencies, it's clear that the world of finance is constantly evolving. As we look to the future, one thing's for sure: precious metals and the role they play in our financial lives will continue to be a topic of great interest and debate.